Well, hi, friends. I bet you are wondering if you're a nonprofit leader. Dangerous word of the day that you probably clicked on this for because it's in the title and you want to know more about this is audit. It's not a dirty word. It's not even a four-letter word, I would say. It's a confusing word. Especially if you live in North Dakota, it is a very confusing word. And I want to clarify that for everybody because I don't even know myself. And that's why I bring on smarter human beings with me. Ann Stoll is with us. She's from Eide Bailey. She's a board member at NDANO, and she's one of the smartest human beings that I know that I'm going to bring on to help us navigate this crazy word of an audit. Ann, how are you?
I'm doing great. So thank you for that awesome intro, Patrick. It's one of those where working together on the board, we've really had a lot of fun.
Yeah.
And then also working as part of a nonprofit together has also been fun too, where we get a chance to look at the financials, get a chance to really talk through all of those extra pieces. And yes, audit. It's such a fun area, especially in North Dakota, because we've got some really unique situations that go on. And I think the biggest thing is that not every nonprofit in North Dakota is required to have an audit. In fact,
What?
very few are. So
Yeah, I always find that fascinating because I learn something all the time when I chat with the individuals like yourself. And I'm so fascinated to kind of walk through this. So we're going to talk through what an audit is, what it's not, and then really what maybe the process is at a very high level. We're not going to go through a lot of things. This is a 101 course, for goodness sakes. But we're going to talk a little bit about the process itself, just to determine if you're an organization that needs one, that wants one, and should get one. So that's kind of how we're going to start. I want to throw this out there as our starting point conversation. I am a board member of an organization, and I think there's some nefarious accounting going on. I'm going to get an audit done. That's the right move, right?
not necessarily, Patrick. The
What?
thing is with fraud is oftentimes it's designed where the audit itself is not designed to detect fraud. That's not going to be the main function of an audit. An audit's main function is to determine based on a test basis if the financials present fairly in accordance with the US generally accepted accounting principles. So fraud could easily be buried, be there, and not be detectable by an audit because it is one of those where, depending upon how the fraud is conducted, it may or may not be found because the audit's main function is not to discover fraud. If you think there's fraud going on, I would recommend talking with a forensic accountant and going through and looking at specific areas where it's easier to conduct fraud. The audit is going to look at the financial statements as a whole. A forensic auditor is going to look at areas where fraud could easily occur.
So an audit's not to just find fraud. In fact, it probably won't. What else is an audit not? Or why else? Like, what is the thing? Because again, we think of this in terms of like, I got to get my financials in order because I don't want fraud and I don't want people seeing that we're an organization that is not on the up and up. What else is an audit not? Because I think we start there and then we'll talk about what it is and then we'll talk a little bit about how you go about doing that. What else are we looking at that you wouldn't necessarily get an audit for? But maybe people have the misinterpretation or the misunderstanding of why you would want an audit in the first place.
Certainly. So an audit also is not a good way to figure out how to report your financials. It's one of those where if you're struggling with certain areas, or if you're going in and you're not sure what's the best way to record a transaction, an auditor has to be independent. And in order to maintain that independence, they cannot have any decision-making capacity over your financial statements. They also cannot do any larger components of work.
Mm.
So if it's something where you're not sure how to record something and you're not sure how to do those pieces and you're not wanting to do those pieces, you really can't pass off those larger chunks of things to do onto your audit team to say, hey, you know what, let's get an audit. We'll know everything's recorded correctly because they'll go through our financial statements. They'll restate these components for us. They'll go in and do these pieces. Not only is that going to be really costly for you, it's also one where it could impair that independence that the auditors have and wind up being that they would have to either modify their opinion or go in and step away from the audit entirely and then say, well, we've impaired our independence to a level where we can no longer audit these financial statements.
And then you got to go find another auditor, and that's going to be more expensive for you in the first place. Yeah, they're
Correct.
not, you're not doing the work. You're double checking and validating some of the work, right? That kind of
Correct.
the thing.
Yep.
Okay.
Yeah.
So,
And that's not to say that the auditors can't go in
right.
and help with certain things. It is one of those where we have a lot of audit standards that have come out recently, things like leases, revenue recognition,
Mhm.
have all come out and they're very confusing. And it's areas where anytime there's a change, you might need someone to help guide through those
Mhm.
pieces. If you're already in the audit realm and looking at having the audit completed for you, that might not be a bad idea to have them help provide guidance from the AICPA or other sources for how to record these pieces. However, it's not a good place to start if you've never had an
Yeah.
audit before and all of a sudden you want to start.
So if you're a nonprofit organization and you think to yourself, I need an audit, what are some of the reasons why you as a nonprofit organization would need or want an audit?
Certainly. So most often this is driven by contributions or grants.
Okay.
So North Dakota itself does not require that a nonprofit get an audit at any level.
Mm,
So to be a nonprofit in North Dakota, you could be a millions in your revenue, millions in assets, and not be required to get an audit. Or you could be a smaller organization, a few thousand. Same thing. They're treated the same as far as from an audit standpoint. Where things wind up, where we see most organizations requesting an audit is one is if they have government money that they're
mm,
receiving. So if they are applying for and receiving governmental grants, it is 750,000 currently. That is changing to $1 million in expenditures. You're required to have what is called a single audit. And so that's one of the big pieces that we see with North Dakota charities that they'll go in, or North Dakota nonprofits, that if they are receiving government grants, they may need to have an audit if they have that 750 or in the future $1 million expenditure component.
gotcha.
Some smaller organizations, non so let's say not smaller, but some non-governmental
Mhm.
organizations may also give out grants. And so you're not pulling in government money, but you're pulling in some money from another organization. And that organization, in order to give you a grant, requires that you provide an audit
Gotcha.
to them. So we do see that as well sometimes, where you'll have an organization that's going out there looking for grants. They're maybe not getting that $1 million in expenditures from
Mhm.
federal money,
Mhm.
but it's one where they're working with other organizations and the cost of the audit is justified because of the amount of contributions that they're getting in. So I would watch and make sure, you wouldn't want to apply for a $10,000 grant and pay $20,000 for an audit in order to get that grant.
Right.
So make sure it's worth it.
Perfect. Is
One
there,
last thing, Patrick,
oh yeah.
before we go on, the final one that we see, so three areas,
Yep.
government grants, private grantors,
Mhm.
and then the third one is other states. So
Oh.
North Dakota doesn't have a audit requirement, but I'm located here in Fargo, and we've got a border state of Minnesota.
Mhm.
Minnesota has an audit requirement where if you are getting more than $25,000 in contributions from sources within their states, so whether that's individuals, entities, or governments, they then could require an audit if your total revenues are over 750,000. They're going to require that you register to solicit in the state of Minnesota, and then they're also going to require audited financial statements if you're over 750,000 in your gross receipts from all sources.
All sources, but you got to take at least a little bit over $25,000, and then that triggers a whole bunch of things. Interesting things. All
Correct.
right. Well, so those are really interesting parameters. I like that. That's clarification, I think, on even for, and again, I've been in this world for 22, 23 years, and still I learn something every day. These are one of them, which is great. This is why I rely on auditors like yourself. This is why you hire professionals to do this work because they know better than anybody else. So, what's the difference between a full audit and a partial audit? Is there a difference between the two? Can you do kind of a maybe like an overview little mini audit? Do you have to do a full audit? Are those the same? Can you pass a full audit as a mini audit? I have very many questions on the size, scope, and scale of what an audit would take.
So we've got kind of four options for you in this area. So one is an audit, and the rest are all not audits. So we don't have a mini or a partial audit. Unfortunately, we can't quite do that. The full audit will put together your statement of activities showing your income and your expenses for the year, your statement of financial position showing what you have for assets and liabilities at the end of your year, and then it'll have a cash flow, a statement of functional expenses, and several footnotes. So if you don't need or don't want that level of
Mhm.
information, that level of testing, the other three options that you have, one of them that's kind of my favorite is agreed upon procedures. And this is where we talked earlier about that piece of that piece where there is new guidance that comes out and revenue recognition or leases. Let's just say you step into a lease and you've got a discounted lease because your lessor is wanting to give you a discount.
Mhm.
And so what do you do here? You're kind of hitting a bunch of different areas. It's a new area. It's one of those where you can reach out to someone and say, "Hey, you know what? We know what we're doing with the pledges. We know what we're doing with the sales that we have. We know how to record our expenses. We don't need you to look into these areas, but what we really don't understand is how to record this new lease that we have. Can you help us out, please?" And what they can do, what we do basically is then whomever it is that you reach out to would go in and they're going to look at those particular transactions and make sure that that area is limited. So it's limited in scope,
Mhm.
if
Gotcha.
that makes sense.
Yeah,
So
totally makes
that's,
sense.
yeah, that's one of them. And that's almost like like you kind of worded it. It could be like a mini audit. It's not an audit though. So want to make that clear. It is one where it's not an audit because you don't get that full level of statements and footnotes.
Sure.
The other two options that we have that are out there, and we do see granting organizations that sometimes request these.
Mhm.
So one of them is a review.
Mm.
And so a review is going in and looking at financial statements. We're not testing details or looking at those pieces, but looking to see, like, do the financial statements represent, do they make sense?
Mhm.
So we're not going to go in, we're not going to test transactions, those types of things, but it's one of those where does everything flow? Does it make sense? That type of thing. So very limited in its scope.
Mhm.
But it is one where that is another option.
Sure.
And then the final option, the fourth one, would be a compilation. And a compilation is essentially what you have is you have your financials that you've put together, but you don't have statements. So you've been recording all your transactions throughout the year, but you want them to look pretty.
Right.
And so that's where the compilation can
Right.
really be helpful, where it's a, hey, we've been recording all of this in QuickBooks. We want it to look a little bit prettier. We want a report from an outside party that goes in
Mhm.
and takes our financials and makes sure that we have everything in here and it
Yeah.
looks pretty.
Okay, that makes sense. Okay, now I have a little better understanding. Never called not a full audit on audit, which is great. That's good. I like that. You slapped my hand very gently there. I appreciate you. One of the things that I was taught early, I think in my career, to not see auditors as the enemy. Right, because I think when I was in larger organizations too, is that you'd kind of have to shut down for a week and a half, or you'd have a team come in, or they're doing analytics with all of your numbers. You got to give them reports, and there was almost always this friction about like don't give them too much, but give them enough kind of
Mhm.
thing. That was always the mentality that we had. They're always trying to find I got you or get you things. That was always oh, they're coming in to look at our books and they're going to play I gotcha games. Where the opposite is true is like you're just there to help navigate and make life easier for the nonprofit. Because I feel like that's maybe the thing that most people need to get out of their own brains when they're going through a process like this is they're not like forced down into your team. They're kicking down the doors. It's not the FBI coming in. These are like a
Right.
part of your own team trying to make your organization look as good as it is. Right?
Yeah, absolutely. No, we always we look at it as being a partnership.
Yeah.
It's one of those where we'll help where we can.
Mhm.
And if it's something where there's a higher level of help that's needed, we'll step back and say, hey, you know what? This is where you have choices.
Right.
This is to a level where we can help, but we're not going to be able to audit your financials because the level of help
Mhm.
that you are needing would then require us to do more. And then we'd be looking at our work and making sure that our own work is correct, which
Yeah.
is not okay in the audit world.
Right.
That's where they look for independent auditors. But yeah, I would definitely say it is one where, I mean, you're not going to want to push them off base, but if they're
No.
looking at revenues, give them full access to all the revenue stuff.
Mhm.
It's one of those where then it's something where you're not hiding things,
Yeah.
there aren't pieces that are missing. It helps with the fraud component too, and especially in the nonprofit world, we should be open. We
Yeah.
really should be because
Mhm.
we have public money that's out there. A lot of our contribution sources, a lot of the people that we serve are the
Mhm.
general public, the government, and other nonprofits or other businesses. It's one of those where if they're giving money to us, we really should be able to be trusted with that money, and we
Right.
should be open with how that money is being used.
Yeah. Well, and I think one of the best parts about having an auditor on your squad is that and again, if you're not one of those people that like picking up the phone, please excuse me, but I always liked calling our audit partners to say, I got a question about this, how much I can give or put on a tax receipt. Right. That was one of the thing. That was one of the hairiest issues that we had because we had a bunch of live auction events and silent auction events and sponsorship kits, and there was always a need to have what is my deductibility on this item. And if the math was wrong, and usually it's just like, well, just give them their estimate and make sure that they tell their tax guy. But on the other hand, it was really great to bounce ideas off of how does this sound? And does this work in your eyes as someone who's seen our numbers on the back end, right? So you're almost working with them in order to make their audit life a lot easier coming down the road. Is I have a question on how much we can put and publicize on a tax deductibility sheet. You're like, okay, great. Let me take a peek at it. And within, either 10 seconds, you're looking at it like, well, don't do this and do this. That'll probably help. And that's just part of the working relationship that you have with your auditors. And I think that's one of the superpowers that you don't know you have unless you have an audit partner on the back end while you're going through all this kind of stuff in the first place.
Absolutely. Yeah, those questions as things come up.
Hmm.
Because it's one of those where, and we prefer that too, because then we know,
Right.
and maybe it's something that you stepped into at the beginning of the year.
Mhm.
Well, then it's something where 10 months later, you're not going in and the auditors are showing up and saying, what have you done here?
Right.
And it's one
Right.
of those, well, this has to be recorded this way.
Yep.
And now you've got to go backwards and you've got 10 months of transactions to correct.
Yeah.
So if you
And
ask
then
right away, lets us know what's coming down the pipe and lets you know how to record it.
Listen, it's nonprofit human beings and nonprofit leaders who got 10,000 things to do every single day anyway. This makes your life a heck of a lot easier if you
Oh,
just rip it off like a band-aid, ask the dang questions, you'll get it out of the date. Okay, so and I think, as people are kind of navigating, all right, now I think I know what an audit is. I might want to engage in an audit firm to kind of help us go through this. Can you give us like a four and a half thousand foot view, not 30, a 4,500 foot view on what's the process, a couple of steps on what's the process that you would go through as an organization through an audit process itself?
right. So really, really, really high level. We're going to want to know what you guys have done. So it's one of those where we're going to want to come in and we're going to want to see your year end.
Mhm.
If you have inventories at year end, if you have other transactions kind of closing things out, we might want to go in and observe those components and kind of watch, wait a second, how are you valuing these
Right.
pieces? How are you doing this?
Mhm.
And see what it is that you have.
Right.
The other thing we're going to want to do is really get an idea as to your processes and procedures. And so we'll want to look through your board of directors minutes, what they're doing. We want to look at policy procedure manuals. We want to look at what it is that you guys have as a whole. Like, what do you have written
Mhm.
to say this is what we're doing? But then we also want to kind of observe and look and see, like, okay, wait a second, here's where we have these components, and then we have what's called materiality. And so we'll look at your transactions. And
Mhm.
materiality means that we're not going to look at every single transaction. What we're going to look at, like I said earlier, we want to get to a position that the financial statements are presented fairly in accordance with those generally accepted accounting principles.
Yep.
And so that's where we're going to want to look at some of your more significant areas.
Mhm.
So if contributions is a significant area and you have just a small amount of payments for goods or services. We're going to spend a lot more time looking at those contributions to make sure they exist, to make sure that they're valued correctly. If it's something where you have non-cash items coming in, if you have pledges, if you have multiple years, we're going to look at those pieces a little closer than we would on the sales. If you got $1,000 worth of sales and you've got 20 million in contributions, clearly if there's a mistake in that
Right.
20 million, it's probably a lot bigger than the $1,000
Right.
than those pieces. So we'll select on a test basis a few
Mhm.
transactions of those more
Mhm.
significant activities that you have to
Mhm.
make sure that those ones are coming through based on what we already know of your
Mhm.
organization for how you're recording those transactions. Is it something where you say you need a signed pledge agreement? You say
Mhm.
this came through in your board meeting minutes that there was a significant donor that gave $1 million to you. Is this coming through? Is this showing up in
Mhm.
your financials?
Yeah. Well, and then again, how you record it, doubling checking on that kind of thing. So in your CRM or or your spreadsheet, whatever you're doing, what's the documentation? Where's the money supposed to go? What's it being used for?
Yeah,
Is it being spent accurately? Like all of those little things that you probably know or you said out loud this is just part of the documentation process. And
right.
we gotta say here that again, documentation might be the most important and most boring, mundane part of your job. But in order to make everything right, because what you don't want to do is have 3 years down the road when you've got, an invoice for a particular major gift coming, and then somebody says, "Well, no, I don't want to give anymore." And I already gave as much money as I can. There's no track and there's no trace. Well, what an audit does is it essentially gives you a nope, it's a forensic analysis on the back end going, nope, you said it here, here's the result, here's the board, here's the like you give you the proof you need to make sure that you get what you need to do and what you get to spend. Oh, yeah, anyway, it
Yep,
gives
yep,
you an extra pair of eyes and enforcement power and really confidence that donors know what the heck you're doing.
exactly. And those restrictions.
Yes.
Because a lot of times we do get contributions that are restricted.
Hmm.
Well, is all of your money restricted? Is some of it restricted?
Right.
And sometimes that flows through the
Mhm.
financial software. Sometimes it doesn't.
Yeah.
Sometimes it's tracked separately because it is one of those where it just is a little bit easier to track it separately for whatever reason.
Yeah.
And so then it's a, well, when were the restrictions? When were those
Yeah.
barriers met? So we
Yeah.
see that quite a bit.
Hmm. So you got all that information and you're gathering it up and you're confirming a lot of things. You might be doing interviews with people who are in the organization or just double checking them like, hey, can you just run a quick, report on when you got this? Just confirming all of these kind of things. You've got all that information. You bundle it together and you sit in a room and you powwow together. You're like, all right, now I'm getting together. Now what happens?
So then what we do, I mean, and this is, we have many hands that go into this. So it is one of those where everyone will put everything together, other people will look at it and say, hey, does this look good? And then it's one of those where we get to a point where we have a report
Mm-hmm.
that we're here's what we want to do. We have some discussions that we have with leadership.
Yep.
So there'll be some letters that go out to them. Usually we'll present the audit at a board meeting and then also talk through those letters, those responsibilities, just as a reminder, hey, we can't make decisions on your guys' behalf. Here's what an audit is. Here's what your responsibilities were. Here's what our responsibilities
Mm-hmm.
were. And then here's what we found. So if there were adjustments that were needed, maybe they were minimal and they didn't need to get done, or maybe there were some major ones that did have to get
Mm-hmm.
done because it would have been something that would have materially misstated the financial statements without having those completed.
Yeah.
So we'll discuss all of those components with leadership. Usually it's the board of directors
Yeah.
that we're responsible and
Mm-hmm.
responding to. We'll also have conversations with, if you have an audit committee, we'll have conversations with them. Sometimes it's the executive committee and then leadership itself within the organization where we'll talk with the CEO, CFO, or top management, top financial,
Right.
whatever their title is,
Right.
just to say, hey, here's what it is.
Yeah. Well,
And
and
then,
yeah.
yeah,
One of my favorite parts of the audit too. And again, we're nerds. We can talk about our favorite parts about an audit. That's okay. It's a safe
yeah,
space. Everyone watching this can be like, "Oh, this kind of found is fascinating." I go, "Yes, it is." But one of the things that I really like watching in a report, and especially on boards that I sit on, is if your revenue stopped today, how much money do you have and how long can you keep your operations open by how much reserves you have? Or like I love the reserve number or the reserve formula to know that if all donations stopped and we ceased to exist here, here's how long we could stay open before things get a little hairy and you're gonna have to pull money out of some other, credit card or run on debt. And as a board member, you feel a lot better knowing that number, and you can make a lot better decisions as a board
mhm,
member and as a board leader to navigate the organization in a way that benefits those that you serve if you know all this information. And this is really an empowering piece to a board of directors because they are the fiduciaries of your organization anyway. They're responsible for all of this, but giving them the power and resources to make decisions knowing that you've got a full audited financial statement and reasons behind all these kind of things, it really makes them a more valuable resource for you as an executive director, as a leader of a nonprofit too.
right, exactly,
Yeah,
exactly. And what if that's restricted and what if it's not? Because
right.
sometimes you see the reserve and it's a
Yeah.
like, yep, here's our checking
Mhm.
and investment account balance.
Right.
But if
Right.
it's all restricted for something and you can't use it to pay the people,
Yep.
what are you going to do for your operations without the people that do the operations?
Exactly. Well, now you've got this big,
Yeah,
beautiful report. How do you see organizations use it? Because really, I think what you don't want to do is spend a good chunk of money on a report that collects dust on a shelf somewhere. We've seen that with, our strategic plans. We don't want this to be a strategic plan. This is an audit we get to use for our superpowers, right? So, what have you seen on ways that nonprofits use this to their fundraising advantage, their marketing advantage, their internal systems advantage? How do you see them taking this report and saying, thank you, high five, and then they go to work doing what?
absolutely. Grants probably the biggest area.
Yep.
is once you have those audited financial statements, go after the bigger grants
Yes.
and use those audited financial statements to request additional money to go in and say, hey, here's this grant and you required audited financial statements. Well, now we've got them.
Mhm.
But don't stop there. Find the other grants that
Yeah.
are also out there
Yeah.
to have that request piece,
Mhm.
because it's one of those where, like you said, if you pay for it, it's only as good as what you've paid for, and
Right.
the audit will pay for itself, especially if you can use it to request those additional grants
Yeah.
and be able to open up your funding sources that much more.
Here's a hot
Now,
fundraising tip. I'm going to give you here bonus fundraising tip that's not audit related, but totally audit related. If you think you're an organization that doesn't have the financial ability to pay for a full audit, but you want some of these big grants, what a great opportunity for you to go to a donor or two to pay or underwrite the cost of an audit that you then get to use. And this is an investment. That's the term I would use when you're talking about an audit. This is an investment in the organization to go chase after the large grants that you wouldn't have the opportunity to do so. You're looking for a partner or a series of partners who can afford a gift of paying for this and going through this process so that you can be part of the squads that are accessing some of these funds down the line. Think of it as an investment. This is a great donor opportunity and a great partnership, and then they get to be the conquering heroes when the grant comes in the first place.
absolutely.
And then, of course, you got an auditor
Great
to
tip.
say, "Hey, how do I record this gift of paying for an audit?" Ah, see, you never have to have a question because you got a
Right?
partner in crime doing it.
Yep, great tip.
I love
Great
it.
tip.
Any other parting shots when it comes to just thinking about an audit 101, conversation as we've had today? Anything that we're missing or things that you wanted to add as a part of like, just think about this as you're going through the consideration process.
I think biggest thing is that the audit team is essentially your partner. They're not wanting to see you fail either.
Mhm.
We definitely see things at times that come through financials that are ones where it's like, well, what are you doing here?
Mhm.
So it's one of those where be open with them, be honest with them. If you're trying to hide things from them, do know that if it's something where the IRS or other regulatory bodies come in and your auditors are unaware of these pieces, they can't help you with those pieces. So if it's something that you've done wrong and you know about it, but you're just like, you know what, this is just how we do it because it's too much of a hassle. It's those things. So just don't talk to the auditors about that component when they come in.
Yeah. Don't do that.
It's one of those where, I mean,
Yes.
we can help you. Policies, procedures, we're full of them.
Yeah.
We know about those pieces and we know, hey, you know what? Here you go. You need to put together a segregation of duties. And
Mhm.
here's some easy ways to do it with a small organization like yourself. So a lot of times nonprofits, that is an area that we struggle in.
Yeah. Stop Googling it. Call your friendly auditor.
Yes.
It'll be a heck of a lot easier. And how do people get a hold of you if they have some additional questions? And again, if you've got questions, drop them in the comments wherever you find this video, because I know that you'll have them and we'll go and search them and we'll answer them as they come along. I am sure of it. But how do we get a hold of you? And if you got any questions,
Absolutely. So I'm here at Eide Bailey, and I spend quite a bit of my time on the tax side. So I read a lot of the audit reports, but reach out to us and we'll be able to answer questions if you have questions. If you want to call me directly, my phone number is 701-239 or 701-239-8590
love that.
or astall@eidebailey.com.
We'll drop all that contact information below because I know people are going to have some questions and I want them to get them. Thank you, Ann. You're the best. I like Audit 101. This was a very enlightening thing. Even I learned some things today, and I always love that too. Thanks so much for your brilliance, per usual.
Awesome. Well, thank you, Patrick. It's been great.
It's awesome.